All right. Good morning, everybody. Got a tiny little headline about Kennedy Jr. having an event today where he's going to clarify his stance on these processed foods and dyes. So keep your head up on those staple companies that we've been looking into. As a part of this capital rotation, growth and value, we've been seeing more of those value names or the defensive sectors, the flight to safety spaces getting more attention. If he goes after those today, then where's the money going to go when it leaves that? Right? That's going to be sort of the $1 million question, I suppose. So I've already started sharing the list. It's the names that I'm sure you've all talked about before. It's not a new policy stance. So it's out there. But I'll share the list and maybe find some opportunities to participate in it. Otherwise, the other economic events that we have on the table, not too bad. We're going to get some data out of Europe, and depending on how that announcement goes in Europe, once Europe closes, their influence on our market is reduced significantly. So if they, pop us out and we start running to the upside, then we get into the EU close, that juice can fade and we can drop back down again. Same thing the other way around. If they happen to cause us a breakdown and we drop lower, then we could, bungee cord back up the other direction after the close. If you're unsure of when it closes, there's a really great website called Trading Hours. This is useful because of time change. Some countries do a time change, some don't. And then, of course, there's holidays and events that can close a market. So rather than just assuming a market is open or when it's going to close, you can go here. It doesn't cost you anything. You don't need to log in. You don't need an account. You can see all markets and then look at when Europe's going to close. And that way, right? You don't have to guess. It's called tradinghours.com. It's pretty useful. It'll give you the time zone in the local time, and then you can go into Thinkorswim and set your charts to that local time and see where the close is. Pretty handy. Thinkorswim itself has something like trading hours, but it doesn't actually verify whether that market is open today or not. It'll just assume, well, it's Tuesday in the middle of the week, and it's between the hours of operation that they should be open, so we're going to just say they're open, and it doesn't actually know if it's open or not. Kind of a mixed bag this morning of what's going on, with the idea that Europe's got data coming out. Kind of expected them to be closer to flat, down 0.5%. The Dow up more than 3/4. Everything else doing better than that, with small caps closer to 1%. They took a lot of the beat down, so getting a reflexive push in the other direction kind of makes sense. It's certainly not the time to rotate into small caps, no matter how many articles you see suggesting that it is. So we're going to get a lot of Fed speakers chipping their teeth, not just in the US, but in Europe too. European Central Bank, Christine Lagarde, is going to be doing her thing. And we've got some auctions in the front end. And then we've got Kennedy. I don't know what time today that he's supposed to do his thing, but I heard it in passing on Bloomberg. And then, of course, I had to go hunt down the article, um, which is behind a paywall. So I just pointed Grok to that article, and apparently Grok was able to read it behind the paywall, even though I couldn't, because I didn't want to buy a subscription to Bloomberg just to read the article. But it is supposed to be today. At some point. So maybe we'll get some clarity or at least a heads up before he starts chipping teeth. Put wall 50.28. So it is back down below us. We've got the 3-period moving average just about at our own Globex high. Above that, the 10, 53.17, and the 20 in the 5400 area. It's a long ways off. We have left the zero gamma and volatility triggers behind. They're in the 5600 and 5800 areas. 5780, it's close enough. I want to continue to keep your eye on these 3 options levels: zero gamma, volatility trigger, and the call wall. We're looking for significant changes to their location, and we shouldn't get that, right? That's kind of the idea, is we shouldn't get that. But if we do, then that likely has some relevance. We're going to pay particular attention to that. Continue to keep your eye on the founder's note. I'm sure when this does happen, if we get that roll down, because it'll be one of two things. The market's going to come back up and get into that level, challenge it from below, or, so I guess there's 3. The second thing would be just continue to chop in this range that we've developed here. We could absolutely do that. Just continue to chop right there. And the third thing would be that we break this low and continue to move to the downside, challenging our previous low, right? So we look at the daily chart here. We're talking about keeping this low intact and not making a new low. If we make a new low and get below 5100, then it's likely we're headed back to this 4900 and challenge that low. That would move these down. The question would be, would they move them down first so that we have something to push off of for that move lower? Or would we break down and then by default, these get rolled down behind us afterwards? I think they'll move them first. My sneaky suspicion. But of course, we'll defer to Spot Gamma's founder's note. I just checked. The AM edition just came out. I'll get that shared with you guys. You'll have a chance to read it before me, I'm sure. Maybe they'll be providing a little bit of clarity. It looks like a bunch of earnings talk. It makes sense. These haven't moved yet. That'll be something you want to continue to watch for. The upper ADR is outside of yesterday's regular trading hours range, but it is still inside of yesterday's range. So it's likely we can hit that upper ADR just one, because how close we are to it, and two, it's inside of yesterday's range, which we are still inside yesterday's range. To hit the downside ADR, we would need to break out of yesterday's range. We'd have to get an inside day breakout, get that going. While it's not impossible to do, at this point, we'd have to argue what would cause the breakdown after working so hard to get back up to where we were. This really looks like a liquidity event, right? If we were to consider the idea of like CPI day, PPI day, right? Non-farm payrolls, when we get that 8:30 candle that's just a big monster candle and we leave unfinished business behind, that's a lot what this looks like. So if we think about where we opened, either because it was the 9:30 open or it was the start of that event, whichever one, that would be the gap that we would want to see closed, right? And it looked like they gave it a good shot, but it was front run. They weren't able to get there. If this is a gap close type situation, then what? Then we get the gap closed and then we go ahead and sell off. We are starting to put in a topping pattern. Looks like this could be the rollover, and then we challenge the half and work our way back down to the low anyways. Much like that, right? Or like that. So if we can get a new Globex high, get through that open of yesterday, ADR half is on the line. That's 52.80. Get an overshoot of that into 52.92 cog line. Then challenge the Globex high of yesterday. It's just above 5,300. Try to get the gap close from Thursday, because all of that is up here. Otherwise, we hold the range. This is our Globex range to deal with. Keep it above the half, or we retest the low. If we break that low, then target yesterday's low, and then a 1, 2, 3, a 111, and beyond that, 50.84, right? Because we'd be looking for those 51.11 cog line, 50.95, and then the ADR half. Today's floor pivot is significantly lower than yesterday's pivot. That's bearish. Price opened underneath that pivot, and that's also bearish. Now, we've gotten above the floor pivot, which is good because we needed to hit it anyways. We did hit it, but we have an MDP from yesterday. So MDP is a missed daily pivot. We didn't hit it yesterday. It counts today. Yesterday was a really narrow channel, which implies that if we break out, we could really run. And it was a good demonstration of that yesterday. We broke out and we had a really good run. So, you know, as I continue to say, these channels don't make price do anything. This channel being narrow didn't make us break out, didn't make us run. It just gave us some insight on, hey, if we did break down, what's the chances that we could actually just continue to go, get a good run out of it? Chances are higher because of the narrow channel. Today's channel obviously is wider than yesterday's, and it's not an MDP because we've already hit it. Yesterday we had to talk about SNR levels. S3 was the target if we continued to break down, which we got there. That was where we paused and digested. It looked like the market was willing to call it good there. And we've seen the flow change, but they weren't able to keep it. And then we took another leg down anyways. We did end up getting back to VWAP. I know I was mentioning that in the chat yesterday, like that would be my target if we could just start to turn this thing around. We did get there, but it was late enough in the day that I didn't mess with it. Today, the SNR lines aren't even hit yet. So we could just chop around in between those two. It doesn't owe us anything. Okay? We didn't get anything through this shallow area here. So not a lot of help from the previous profiles. We did have some structure back here. Is the lower D. And for the week so far, this isn't really clean, but we could consider this a lowercase b with the profile point of control in the slower section. This isn't a really good B, but work with what we got. The point of control is underneath this. Want to keep your eye on that 5240 area, see if it gets moved up. If we're able to get back above this level and keep it. Otherwise, coming back down and retesting that 5162 is likely. We are outside of the value area at this point. Kind of want to keep that. It's 5216-ish. Ten-day, 30-minute volume profile with TPO. Still not expecting to see any change here to the point of control. If we can get a breakout back into Thursday's levels, we could put more volume in place at that point of control, maybe challenge it. But to get it to move, we'd need to stay in one spot and build out these volume shelves enough to challenge that level, or go back to one of these others that are already built out and build them out some more. The candles that made this point of control are in this zone and here. So we've got days to get through before we even get to these candles to start wiping them out. So that point of control isn't going to move anytime soon from default, from us just taking the candles off the board. The only thing that's going to get it to move any sooner is if we hang out and build out a new price shelf. At this point, nothing in this current range or zone fits that description. We'd need to break our own Globex low and get down into this 5,000 flat area, or get above the point of control and build out one of these two higher levels. The takeaway from this chart really is that 5320 or 5312 cog line, it's a significant level. It's a lot of structure up here. It's going to be very difficult to get through it. While we would never say it's impossible, price can do whatever it wants. It would take something really big, some headline that really galvanizes the market to get us through this level. So it's not going to be just, a short covering rally, rumors of a Fed rate cut, something like that. It's going to have to be something really big to get through this level, or it needs to dissipate, the time to get taken out. We've still got a couple of VPOCs overhead, nothing new from below, since if we were to start a new one, it's already been hit, right? So the textbooks will tell you to carry that line forward. It's yesterday's point of control. I've got enough. I don't need more pivots, but if you want more pivots, right, the textbooks do offer that suggestion, the value area high and low and the point of control from the previous day. Just carry them forward into today's trading, have them marked out on your charts in case we go back and hit it. It's very likely that price will respond at those levels. So they're worth having on the chart. I have enough. You can see the significance of what we've been building out so far this morning. They're really working on keeping this in the zone. So a lot of structure. We can get out of this range, but they're putting in a lot of work to keep us here. So what are they waiting on? Which one of the events today is going to be the event? And remember, this week's range is significantly smaller than last week's range, and last week was a 4-day week. And like we talked about yesterday, the smaller range kind of implies the market knows that there's something big this week and is expecting to sit on its hands in a pause mode, hurry up and wait mode, while whatever this event is happens. And then we'll kick off with some volatility and away we go. Yesterday's sell-off took us outside of the week's expected move, and then we managed to get back inside the range and close within it. It's also the half back that we had talked about. Need to move that just a bit. This pullback that we've got, measure the halfway point. We need to stay above this line in the sand. Now we can wick down below it. We just need to close above it. So far, so good. If we lose that half, it's very likely we're going to come back down and challenge the 5,000 level, 4,900, on down from there. All right, I just put the AM edition in the chat, so you should be able to see the founder's notes. We're still below the 10-day. If we can hold the line and base or chop from here, then the 10 is going to come to us. It'll heal itself, right? This is the requirement of a correction, whether we correct through time or by price. We kind of need a correction. So this isn't as bad as it could be, where we're at -3. Now we're at -1.8. a simple point of view. We haven't moved too far, too fast. It doesn't owe us any sort of mean reversion from here. Taking a look at the weekly, while we had that really big dip and we managed to pull back from that, we have been continuing to push farther away from that 10-week. Now, these can change drastically, really fast. You can see how a lot of these, they went from being really deep negative to being right back to the zero line or completely across from being really negative to being positive in a single shot. So it can happen fast, especially in bear market environments or negative market environments. Some of the biggest positive moves in history have happened in bearish market conditions. But we're not at the extremes on the downside, so we're not looking for any sort of extreme reversal either. And as for the question about, how is all of this going to be fixed? It's a multiple piece question, right? There's multiple parts to it, because once you erode the confidence of investors and traders, then you have to work to get that back. And that's one of the biggest things that is broken right now, is that confidence. So that's an issue all by itself. Then there's the tariffs and the impact of that. So those two pieces alone are really big pieces. And then there's more, and it just keeps going and going from there. But those would be the two biggest things: rebuilding confidence and getting some guidance on the tariffs that don't change every 24 hours. So looking at things that are down this morning, the VIX is down close to 4%, bonds, and that's about it. If we look at what's up this morning, and the benchmark we use is 0.5%, then we start right around this SPYG, which is the S&P Growth ETF. And above that, we've got MAG 7, another MAG 7, oil and gas, chips, clouds, finance, gold, gold miners, China. Again, we get into some Bitcoin, more China, more China, more China. So a lot of these names up at the top, a lot of these ETFs and ETNs, they're China representations, right? So KWEB is China, MCHI, also China. Emerging markets is really dominated by Chinese companies, so that's another one. And they've taken a pretty good beating, so it kind of makes sense that they're getting a flip in the other direction. That doesn't necessarily make them bullish, right? This is more of a reflexive bounce than anything else. But there is room for things to make some moves that are kind of flat or slightly positive that could move in the right direction. So banks, KRE, uranium, airlines, we could get those moving to the upside, get a little bit of help. Home builders. The bond ETFs like SHI, this thing's been getting a lot of attention lately. There was this one, and I think it was IYG. maybe it was junk, but it was shy, and one of the others is getting a lot of attention, from people just looking to cut out the noise and perhaps just, take a smaller win on the year, but a more, I don't know, constructive, safe isn't really a good word to use there. Consistent return on the year. It's not going to be big, but all right, those miners got really extended. Now they're just chopping around up there, putting in a top. Just because they're putting in a top doesn't mean they're going to come down. They could, defy gravity yet again and go even higher from here. It's a bit of a basing pattern. The base case argument is that they would come down first, right? Because that's generally what price does, especially when it gets extended as much as this has been extended. But there's so much attention in that space right now that I wouldn't try to short it. I wouldn't get in front of that steam engine. If we were looking for crude to get back to 70 by the end of the month, the clock is ticking and that thing needs to get up and go. Got significant resistance at 65 that it's going to have to work through. But the year-to-date anchored VWAP is right around that 70 area. So I do like it. If we can get through that halfback and really start moving, then that's a good target to aim for. But this just can't seem to get going. Good news, I guess, is that we're out of this range, right? That 62.5, that the top side of this control bar. We are out of that, and so far we're holding even after testing it on yesterday. So now we got this new little micro range. Get out of that. Continue to push for 70. %67 of the NASDAQ this morning is up at least 0.5%. That's a really good start. But what names are up kind of matters as much as how many names, right? So you got market breadth. That'd be how many names are up. And we use the NASDAQ 100 so that we can just do percentages really easy, right? If there's 100 names and I've got 67 names that are up, then that's 67%, right? Simple stuff. So market breadth, we've got a lot of names to the upside, but we already know that the Mag 7 are bullies. They can push the market around, and those 7 can force the other 93 to do whatever they want to do. So when we're looking at what's up in the pre-market, yes, breadth matters, but we do have to give consideration to the names that are up and really focus on what names, what sectors. Chips, we can see a lot of chip names are up this morning. That's a dominant sector. We know that chips can move the market, right? Just thinking about NVIDIA for an example. But we've also got NY Fang names, which is a little different than Mag 7, but it includes PayPal, Tesla. I think ARM used to be on the list. It's not anymore. To be fair, I haven't checked it in a little bit. The components change from time to time. right? This NY FANG Plus index. See, Tesla's not on there anymore. Netflix is. So that's the current NY FANG group. Broadcom and Now. These two on the end are the ones that often change the most. Right? When you see this get restructured, it's usually these last two names that end up getting moved. But these two have been here for a while. But we've got Amazon, Microsoft, there's Adobe, Google. We've got the Mag 7 in there. So that's a good start. If we want to see a continuation of this little bit of a run we started this morning, then those are the names that are going to have to get it done. 58% of the S&P 100 is up this morning, at least 0.5%. You can see a lot of those banks in there. And Apple, the other Mag 7. So it's a good start. The other thing that can get us to break out or help us keep the breakout would be some intraday options flow, right? We can't see that in the pre-market because we don't have any to measure, but that would be another piece. And then level by level, right? Breaking out of yesterday's RTH and then breaking out of yesterday's high completely, then getting into the previous week's range, which we actually rejected off of that. That's what we hit in the pre-market, last week's low. This is yesterday's RTH. So we hit last week's low, we rejected, we fell back down. One of the things that we would need to do this morning, get back inside of yesterday's range, then get through the RTH open or yesterday's high, RTH high, get through that, then the full high of yesterday, and then on and on and on, right? Get through Thursday's levels and work our way back up. The big one right now seems to be last week's low. It's a big one. It's what we rejected off of. Keep your eye on the headlines. I don't know when RFK Jr. is going to come in chipping his teeth, but if he kicks the legs out from underneath the defensive sectors, I don't know what that looks like, right? Can't quite grasp where we're going to rotate into if we're going to rotate out of defensives when nobody really wants to get into offensives, right? And sure, yeah, the Mag 7 is up a little bit this morning, but more of a reflexive bounce, not because of some bullish behavior, bullish bias. What I got for you guys, be careful, be safe, watch the clock. I'll see y'all tomorrow.